India's economic growth slowed more than anticipated in the month of January quarter, now cooling for a second consecutive quarter. The GDP growth rate eased to 4.4%. That's slower than a median estimate of 4.6%. The growth rate moderated to 6.3% in the preceding quarter after double-digit expansion in the first quarter of the current financial year. The economic expansion slowed as rising borrowing costs crimped consumption, a key growth driver. Now, earlier in December, the Reserve Bank of India had cut the GDP growth forecast to 6.8% for the current fiscal year from 7% earlier. Now, that was on the back of continued geopolitical tensions and tightening of global financial conditions. The RBI had cut the growth projection for 2022-23 for the third time in December last year. At the same time, the IMF and the Asian Development Bank have projected the economy to grow at 6.8% in 2022-23. Now, for more on this, Ishan Garg joins us live from New Delhi. Ishan, good to have you with us. The numbers largely in line with expectations, albeit weaker, many predicting a moderation in India's growth momentum. Does this mean that the economy is losing speed?
It certainly does look like it, but many analysts here are saying that this is not a slowing down of the economy, but kind of a correction in the economy itself before it picks up pace once again. Analysts are pointing out that this quarter's figures are compared with a higher base of the 2 quarters ago figures, and that is why we are seeing a correction in the economic growth. However, the pandemic-induced and the war in Ukraine-induced problems for the Indian economy still persist, and that's why some of the key sectors of the Indian economy are not seen to be performing so well. However, the data that the government has released are showing some promising figures. For example, the primary sectors of the Indian economy have grown by about 4%, which includes sectors like agriculture, and then 12% growth in areas of manufacturing, which is a huge boom for India, which is a country that is heavily reliant on its service industry and not so much on its manufacturing. So this is a sign of positive growth. And finally, in the services sector, we are seeing an 8.8% growth as well. So these are some promising signs that show that the Indian economy could be moving in the correct direction. And analysts also point out that with the government expenditure touching very high figures, almost at an widening the fiscal deficit at the same time as well. But the government's expenditure in creating jobs and creating new opportunities, they are going to bear fruit in the next few quarters.
Ishan, the RBI has been on an aggressive rate hike journey since May last year. Would today's data influence that trajectory in any way?
It's likely that the RBI could be looking at more rate hikes because the inflation rate in the country is above the Reserve Bank of India's tolerance limit. But the RBI is also treading a very fine line here, because if it hikes the interest rates, it means that the inflation might be brought down under control, but it's also going to hurt consumer spending as well as investments, because the companies will be more scared to borrow more money. So this is a very difficult situation for India, because it certainly wants its consumers to spend more money while at the same time trying to adjust the inflation rate. But the Reserve Bank of India will have to take a call at the next monetary policy. At the same time, analysts are saying that a high inflation rate might be worth risking if that can guarantee strong economic growth in the months ahead.
Ishan, thanks for that analysis. That was Ishan Garg reporting live from New Delhi.